Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. You want to know about the technicals driving the dollar versus Swiss? Then stay right here. Today's date is August 3rd, 2023. Focusing in on the hourly chart, the 50% midpoint of the move down from the June 30 high came in at the 0.8784 level, and in trading yesterday the price tested that level and then moved above it, but the momentum faded and the price moved back below the level. It looked like the sellers were going to take more control, but in the Asian and into the European session, what did the price do? It moved back above that 50% retracement level, but once again it could not sustain momentum, and the price then started to use that 50% as resistance right here and rotated back to the downside. Now, the move lower has now taken the price to the key 100-hour moving average. That's the blue line in this chart. It's always present in on all my charts, and going back in time, when you look at these lows right through here, this was the low on Monday, this was low on Friday. Each of the time the price moved close to that 100-hour moving average. We found support buyers against that level, pushing the price back to the upside. So indeed, we are true to form. The price did find, or the pair did find, support buyers against that 100-hour moving average at 0.87364, and we are currently trading higher at 0.8760. So what does that say? That says that going forward, guess what? The 100-hour moving average increases its importance as a technical level. Not only do we have one, not only do we have two, but we have three now test that moving average, and each time the price has come down to that level, despite it moving higher, we still find buyers against that level. As a result, if the price were to break below that level, that would tell us something as well. The sellers are taking more control, at least in the short term. They'll have work to do. For instance, if the price were to move below the 100-hour moving average, you still have the 38.2% retracement of the same move down to get below it at 0.87292, and then we'll start to look toward the 200-hour moving average. It's a green line in this chart, currently at 0.8695, so we look toward that, and ultimately we need to get back below that 200-hour moving average to increase the bearish bias. But in the short term, getting below the 100-hour moving average would still give sellers something to talk about. So now, with the price currently trading up now toward the 87.60 level, that's really not in danger. We're still 5 pips away from that level. So the focus returns back to the 50% retracement level. That's at 0.8784, and still the same trade idea remains. Get above the 50% retracement level and stay above, and the bias returns to the upside. The next target above that level, in addition to the highs through here, would be the 88.0696 level, and then we start to look toward this swing area between 88.51 and 88.66. If I were to go to the 4-hour chart of this currency pair and look back over this area right through here, it goes back quite a long ways. Number of weeks in the past, that area was a swing area. Admittedly, we went below it here, but then reestablished the support against level before moving higher. And on the way to the downside, a few weeks ago, the price fell below that area here and used that level as resistance here before moving to the downside. So it would be our next key target on the top side. So there you have it, a look at the dollar versus Swiss. My name is Greg McCloskey. Good fortune through trading. Bye-bye now.